And there's Kipp. Okay. All right, I'm going to do it. This is going to be, I'm going to do this live in a sense, and this is going to be mainly for the Fusion subscribers, but it's also going to be in relation to others as well. Let's take a pause here. I'm going to pause the screen, and I'm going to log off of our webinar account, and I'm going to log in to my personal account. I track all my positions. Okay. All right. Let me unpause the screen here. There we go. It's going to change slightly. Okay. So there we are, bearish sell again, as we saw, and we're 2 in a row. Kipp's question here is, with the 2 bearish sell signals today, would it be productive to review what you might do with a position such as Ritchie Brothers? Okay. Ritchie Brothers is the married put I'm in. I was thinking you were going to ask about the darling position, Kipp, and that's the one that I was alluding to during our discussion of income method number 2 that I'm going to get more in depth with over next week for Blueprint and Fusion subscribers. And you've heard me make other comments. They're all 3 here. All right, here's Ritchie in the position for about 16 days, new position. Bought the stock at 70.57. Bought the June 75 put for 940, carrying a risk of 6.2% on the position right now. I'm seeing the sell warnings. It hasn't reached 75 yet. Okay. It's been, let's go to the stock chart so I can show you. Since I've been in this position, 16 to 20 days. Okay. So right about here, started to move up as I wanted to, right? So we got in right at about here, 15 days ago, so right about here. And it kind of went up towards 72 where I wanted. Really tempted to sell the 75 call, but didn't see it. And then it went down and it started to move back up. But you see the MACD is kind of saying, no, I don't want to cross yet. And then it kind of looked like it was coming back and then didn't. It kind of went back down again. It's a concern. It really is. Now the sell warnings appear. Where am I on the RBA position? I'm in it for 16 days. Usually the 20-day time frame, is the checkpoint. I'm down 2% on the stock. It's down only, what, 0.8% yesterday? Is that right? Oh, no, it moved up at the end of the day. I'm sorry. Okay. Okay, that's fine. Yeah, so 2 days ago, it was up a little bit better. Kipp, then it came back down again. Okay. All right. Now, looking at the married put position, I'm not where I want to be necessarily right now. I could sell. The first basic thought, Kipp, is what we talked about earlier. Seeing the sell warnings coming on, what might I do with this position? I may just force going out to February, sell a 75 call, get 60 or 70 cents. Okay. That's not really, though, I think, the smartest move. It gets the risk down to 5.3%, but it doesn't give me much to the upside in this case, especially if it continues to fall down. Why do I not want to sell the 70 call? Because again, following the rules in the blueprint, if you sell a call below the put strike price, remember my initial risk was about 6% or so. I don't want that, okay? Because I'm thinking that with the 2 bearish signals, Kipp, that trigger might last 20 to 30 days, maybe not 40. The market recovers, I can get trapped. What else is coming up between now and February expiration? Oh, it's not. It's expected after, so that's a bonus. That's something to keep in mind. That's good. The earnings is after the February 19th expiration, expected to be, but it's not confirmed. So that's a positive. But I hate this. I don't like this structure. No real potential for profit, 2 ways to lose, not the way to go. January is only 7 days away. I have to go to February, Kipp. I apologize. Do I want to do that? No. Do I want to do that? No. I don't like the numbers, but I'll do it anyway. Don't want to cap the gain, so I might want to leave the upside open, get some income to hedge against that, and maybe hedge against it further. I know I'm just clicking things. What am I doing here, Kipp? Sometimes there's a potential for a quick income method number 6. Get about 245 here, pay about 70, 80 cents here. Okay, so still get a credit of $1.60. use most of that to buy an extra put. An income method number 12. A 12 funded by income method number 6. Gives me a W profit and loss chart. I'm not expecting the stock to drop down to 61, not expecting the stock to go up to 81, 91. This is a large, what we call death valley, area to potentially lose. Its potential, what did it do? It kept the worst case scenario of maximum risk at 75 at 5.5%. And if the stock falls, I make on the income method 6. If it falls a little bit more, I make a little bit more on the put. Then I can sell my longer term put and move it down. Be in a position with maybe only 2 or 3% risk with a stock trading at $61 or $62 if it falls that far. It's a possibility, a confusing one, but that's the possibility. It's not in the position where I want, where it's any good idea. A third option, of course, and I might not post this for the public because this is getting into major blueprint territory. I might use income method number 3 on this. That's a possibility. It's not doing what I want, but I can take this profit off, move the put, have a lower risk, maybe move the put and buy 2, and have that V profit and loss chart for income method number 12. So Kipp, on the free webinars, you know I don't go that in depth into it, but what I'm looking to do when I see the 2 sell warnings, if you've always heard me say it, with a married put position, if the stock's where I'd like it to be in this area, likely selling a call, I might try that 6 and 12 combination to get that W profit and loss chart if the break evens are not too wide. That's what I'm considering doing. There's a potential for income method number 3 to lower the risk on the position also. That's a potential to do in this case. And I could do a 9 and 3 combination right now. I'm considering that also. But that wouldn't help me in a decline. It would just lower my risk in this case to maybe 3%, maybe 2.5%, but it wouldn't give me any further advantage if the stocks do fall based on this. But that's okay. I had lowered the risk from that original 5 or 6% or so down to 2.5%, maybe 3% in that case. There are options. And we're going to be going into that next week, whether I do it beforehand or not. Most likely you'll see adjustments in that case. For Fusion subscribers, and Blueprint owners will see discussed adjustments on all 4 positions, going forward. Kraft isn't really adjusting. This is a position where it's just a bull put credit spread because I got a sign on the short call. Now this looks terrible, but keep in mind my actual cost on this put, I don't think this comes up right. My cost on the put is actually a negative 250. Yeah. That's the bull put credit spread I'm in now on Kraft, continuing the RPM after I was assigned on the short call. I sold a put to get back into the position in that case. So it created a bull put credit spread with no risk. If it falls just below 33.50, I'm going to take assignment on this and continue the Kraft married put position by buying another put further out in time with a lower cost basis from previous profits. If it stays up, I'm out of the Kraft position. We'll move on to something else as well. All right. AEM, this is the one I was talking about where I said earlier in the presentation, we talked about this a week ago, didn't we, Kipp? If I'm not mistaken, where we talked in depth about how I should have done an adjustment here with potentially 12, definitely here, then used 9 here, 4 here, 4 here, and I'd be back to a 1% risk, if not bulletproof at that time. Had I done that? I didn't, and so now the stock moved up and it was looking good. We were going to roll down to the 75 or 80 strike put, sell a call against it, cut the risk in half, and then it did this to me today. Prices aren't right. Not as confident. It had that great MACD rise above the signal line and the divergence line, and then today it didn't like what the market did, and we're seeing the sell warnings. So this might be an opportunity to sell the deep in the money put now, come down in time, and potentially buy 2 cheaper ones to create the V profit and loss chart, a form of income method number 12 in that case. Okay, so that's what we're looking for there as well. Okay, Kipp says we did talk about AEM and it's heartbreaking. That's not heartbreaking. I'm still in an okay position with this, even though it's a loss, and I'm getting close to my time frame when I'd adjust it. Remember, keep in mind, at one point, this was down 19%. I was down 5. It's heartbreaking that the stock did this, but at the same time, might be in the wrong position. I agree with that. Could have just closed it here for 5%. Could have managed it, and again, probably been at a profit here, even though my cost basis was up here. 83 is what we paid for the stock, then the put on it. Ways to adjust it, just missed the first signal, and then it became a little bit too late. Could have done adjustments here, but I didn't want to get tricked, and I got tricked. And that's what happened there. The beast of the one is DAR. And that's the heartbreaker for me. And this relates to what I said I was going to talk about with income method number 2. This is a perfect married put position so far, with the exception of one minor detail. You do an income method number 1 and you see it go up, and you say to yourself, as I mentioned, when for Robert, would you maybe consider not rolling the position when it goes slightly above your strike price? Well, it's because it goes slightly above your strike price, and then it just gaps in 3 days, and it goes from 56.70, 57 up to 66.80. Why haven't I rolled this call yet? Well, because I was kind of looking for a little bit of this today, not seeing much of it. And with the 2 bearish sell warnings on it and the expiration in 7 days, I'm hoping for a little bit of pullback here, maybe see it come back down to 60, 58 would be lovely. But if it keeps moving up, I've got to do something, because this thing's about $11 to buy back now. I'm not going to be able to roll for a credit on this position. I am going to be able to move this position to almost no risk, even with the call deep in the money with other income methods in this case. But this is that example we talked about, sort of for Robert and Bill, mainly for Robert, when he said, at what time would you not roll the call? It's when it goes slightly in and you're evaluating roll, and then suddenly it jumps, and it jumps again, and now you find yourself in an awkward position. And not so much awkward, I just don't want to pay the money on it. We'll be covering that next week. Fusion subscribers, Blueprint owners will see in-depth discussion on all those. Maybe if I can get any additional thoughts from Ernie on his positions. This is why I just teach my positions, because I know them, and I post all my thoughts on them, and I keep my notes in the portfolio on them when these things happen. It's not that I'm not watching it, it's that happened. And now I'm sort of in a waiting game, but I'm seeing 2 bearish sells, 7 days to go. You can see it exceeded it. Once it exceeded this was actually, I changed it again. This was actually 57 as an alert for the stock price to roll the call. And then just in 2.5 days, went up 7% one day, went up 4.5% the next day. And I just had to sit back and say, there's no point now. Plus the volatility was still going crazy. The midpoints were crazy. On the first day, this stock moved above 60 with 12 days to expiration, 9 days to expiration. They wanted $4 of time value. Not $4 to buy it back, because it was at about 64 or 65. They were looking midpoint, best potential price to buy it back was $14, with it being $10 in the money. I'm not giving up $4 for 12 days. Sorry. That's arrogance. That's me, Robert. So sometimes you don't want to trade the way that I do. It's not that I'm ignoring the signals. It's that now I'm looking for a pullback based on the market sentiment to manage this position, but also play the other ones, as we just talked about with Kipp, to get better prepared for a decline. And AEM, it's going to be a tough one to decide what to do on that, because any type of additional adjustment I use with the put right now is likely to cause some risk increase. And I'm not sure if I'm going to do that if the stock's going to go down. And any kind of V-shaped profit and loss chart with 12, using income method number 12, the risk is going to be way too high. Okay, Kipp says, thanks for the going over these positions. That's a nice snapshot on your ongoing analysis of where the position stands. Yeah, if I had my crystal ball, I'd share it with you. But as you can tell, AEM has not been the most brilliant use of my crystal ball. And DAR looked like a fantastic trade off the bat. It did exactly what I wanted for the first 22, 23 days. Exactly what I wanted. And then out of nowhere, 3 days in a row. Didn't expect that much reaction to the events of this week. And doesn't look happy. It doesn't look happy. It's not the best position I've had. It's one of the biggest, not the biggest, but it's in the top 10 easily of growth positions. In other words, stocks that have moved up the highest percentage in the first 30 to 40 days I've been in a trade over the last few years. But the return is not as good because of income method number one. And I made a promise to myself 3 years ago, and I was right. In 2017, I was going to stop using income method number one and only using income method number six, but the market's changed. And this year, looking at the way things were rising, I was hesitant to just use income method number one. I wanted to use six, and this is the one that burns me. So that happens to the best of us, and of course it happens to me.